Welcome everyone to Sir Anthony's fifth virtual keynote panel under the high patronage of His Highness Sheikh Ahmed Al Maktoum. The name of this panel today is Digital Assets, Investing in Startups and Succession Planning. I would also like to thank our sponsor for today, which is BVI Finance, your international business partner. With this, we have a very special moderator with us today that we've actually never had on our virtual panel. And Sir Anthony, Ritossa, and myself, we're extremely honored to have her with us. And her name is Tatiana Kaufman. And Tatiana is a Forbes Money and Markets columnist and known for heading up venture capital investments for Grammy Award winning celebrities, the Chain Smokers, and Lincoln Park in Los Angeles. She's an incredible thought leader, expert in finance and technology. She's constantly being featured in Forbes, The Economist, Business Insider, and TechCrunch. She speaks at numerous events, including ours, our upcoming conference in Dubai, end of October. And she's also a frequent speaker at TEDx. So Tatiana Kaufman, thank you so much for moderating this panel today. And I leave it up to you now. Thank you.
Thank you so much for having me, Vanessa and Sir Anthony Ritossa. It's a pleasure to be here. Good morning or good afternoon, depending on where you are. We have an amazing group of panelists here today from Switzerland, from BVI, Kingdom of Bahrain, Canada, and of course, Dubai. And I'm excited to be joining the event later this month in person. 2020 has been a crazy year for all of us. It's been a wild ride for both of us personally and for our portfolios. We've had to look at different sectors and reevaluate and rebalance. And just when we think we've gotten the hang of it, some crazy piece of news comes out, from markets crashing in March to a $3 trillion stimulus coming out to us riding up the stock market and things shifting again over the last few weeks. We've had transformative announcements coming out every single day, and as investors, we've had to react. But as we all know, where there's chaos, there's always opportunity. And so I would love to talk to our panelists today about where they see those opportunities, and perhaps they can share some insight with us. So before further ado, I'd like to jump in to chatting with our first panelist, Hadi Al-Alawi. You have a successful family office, Al Hayat Group, from the Kingdom of Bahrain. You manage businesses across technology, healthcare, fashion, and real estate worldwide. What effect has the current economic climate had on the various sectors you are currently involved in?
Thank you very much, Tatiana, Vanessa, and Sir Anthony for this beautiful session. So I would like to say that through bad times, people will learn a lot if they know how to utilize that bad time. So this COVID-19 has taught us a lot of things, and it opened a lot of doors, especially that we can do all our business online, like this session. We don't need to go to office, and maybe people who has got big office, they shrink it to small office. And I always believe to go against the trend. Like if people are selling, I buy, and if people are buying, I sell. So with the little bit background about my company and my family, I have established Al Hayat Group in 1990 with $1 million from my father. And I am one of 13. So my father in 1990, when Saddam Hussein invaded Kuwait, he pulled $13 million from his bank account, and he distributed that to everybody of his children, the 7 girls and 6 boys, with a condition that $1 million doesn't go into Vegas or Monte Carlo. It should be in a business. So I started my business in 1990. At that time, we had 2 auditors, Deloitte and Ernst & Young. They suggested to put the money in the bank and wait till we see what happened with Saddam. So I said, no, I want to start my business straight away, because maybe some people will freak out or some people will say, I can't start the business So the auditor, they said, you're crazy, you know, you're getting a 12% in the bank fixed deposit. So why do you go risking it? Just wait till we see what happened with Saddam. I said, no, because maybe I can get a business at a good price. So their advice said, put $700,000 in the business and 300,000 buy gold with it. So that's what I did. I put 700,000. I buy the gold at that time. 1 kg is $10,000, so 30 kg of gold. And they are still with the Swiss Bank Corporation. I have not used it. Now I think it is about $50,000, $60,000 the kg. So that's how I started Al Hayat Group. And I came to my brother and sister. I said, I'm starting before you. So I gave them a menu of business I want to go in. And I tailor that business according to my children. I have 3 girls and 3 boys, all grown up, and also my wife. So I had selected 8 different businesses. And they said, you're crazy. How can you go with 8 businesses? I said, well, I have a redundancy plan if something fall off. And then I did it because of my family. Like my wife, like real estate. So I have a real estate company. My 3 girls are all of them designer. The eldest is fashion designer. The middle one is interior designer. The youngest one is a graphic designer. And the boys are in between. And I have a lawyer, my eldest, and then an architect and an accountant. So, and I picked up finance and investment in that 8 different division. So I never regret it because I believe if you want to be successful, you have to have a very good succession plan. So with the grace of God, I had a beautiful succession plan. And with that succession plan, I put governors because I can remember Francisco yesterday, he was talking about safe. So I relate succession with governors, and safe, for everybody to be safe, is with value. If you know how to go and put a good value in your business and everybody appreciate his value, then you can have a successful business. So since 1990 till today, thank God, touch wood, thing is going in the right way. And I think in about 2 years, I will just say bye-bye and leave the business to my children. And by the way, they brought me 12 grandchildren because they're all married. So succession plan is a very important in business. And as I said, maybe yesterday, this pandemic made us so close as a family with each other to understand each other's needs, value, and to make sure that everybody doing his job in the right way. Thank you.
Wonderful. Thank you so much. Yeah, I think succession is so important for all of the family offices involved. Simon Filmer, you actually specialize in succession planning at BVI Finance. In your extensive experience, what are the key elements of succession planning and where do people often go wrong?
Thanks very much, Tatiana. Thanks to everybody, and thanks very much to our sponsor, BVI Finance, as well. My name's Simon Filmer. I've been involved in the financial services industry in the BVI for more than 20 years. And as you might be able to see in the background, I'm actually been based in Dubai now for the last 5 years. There are several key elements to succession planning. One of them is knowing what you want and what you need. Sounds like Hadi very much has this covered within himself and his own family. But if you don't know what you want or what you need to talk it through with a trusted advisor to be very clear on what you do want and what you do need for your own circumstances. Every situation is slightly different. When it comes to the time of undertaking structuring, it's very important to have the right jurisdiction and also the right service provider. For the jurisdiction, you would be looking for a few things. You'd be looking at the legislative framework. You want it to be innovative, modern, flexible, and up to date. And that includes a court system that protects shareholders, will protect your interest, and also which deals with any high value matters with a fast turnaround time, as happens in the BVI commercial court system. You'll also be looking for the right service provider. You want knowledge and experience of the jurisdiction, but you also want knowledge and experience of the sort of issues that the family would be dealing with themselves locally and internationally in terms of where they're located. So that might be an understanding of culture, an understanding of language, and really getting to know the family and their needs and their wishes. So the next part of that, Tatiana, was where do people often go wrong? One of the points that I wanted just to reference here when it comes to succession planning is ensuring that any structure that is put in place, you, as the settlor, have a sufficient level of control around that structure, and you understand the controls that are in place, the controls that are being handed to others, and the controls that might be handed to the next generation. That's absolutely critical. The BVI has a key offering called the Vista Trust. And the Vista Trust is designed to cater to the needs of the owners of family businesses who require autonomy in their business operations while they're continuing to operate, but it allows the owners to address any succession issues at the same time. I won't go into all the technical pieces, but some of the important elements are that assets would not be subjected to probate. They can be passed to beneficiaries smoothly and quickly without the public time-consuming and expensive probate process. And the Office of Director Rules allow settlors to control the appointment, removal, remuneration of directors in companies to be appointed subsequently within the structure. It's confidential, so no central registration of that. It can be revocable as well, so it can be undone if circumstances change as well. So all of these pieces are really important. The last 2 points that I just want to make quickly in terms of potentially going wrong: don't buy a product to suit a service provider. Be looking for a service. That's really important. And the last piece is, all of this does cost some money. Don't be too focused on the costs, but look at the value that you are going to get in terms of the structuring from the long term. So that's my sort of answer on succession planning. And it sounds like Hadi has all of this covered as well.
Thank you.
Absolutely. Thanks so much, Simon. What great advice. I'd love to jump to Francesco Lombardo next. You're the managing director of the Vintage Family Office, and you also have extensive experience helping families plan for the future. What are some of the key emotional and unforeseen issues in building family businesses and family offices?
That's a great question, Tatiana. So being the managing director of Ritossa Family Office, the best way to describe what we do is we help human beings within the family play nice with other human beings within the family so they can own and operate businesses more smoothly. You know, so Hadi's talked about succession, and Simon has talked about the importance of having the right structures and the right processes. I would like to talk about that we can't have the big conversations about succession unless we feel safe with each other. See, and it's a basic human need to want to feel safe. We want to feel safe in our environments, want to feel safe in our relationships, and we certainly want to feel safe with our wealth, which includes family members. The challenge is most of us come from this complicated thing called family, where somewhere along the line feelings got hurt. You know, somewhere along the line, maybe as a little child or as an adolescent or a teenager, we expressed ourselves, and the recipient of that expression didn't like it, and we got shut down. So we told ourselves, you know what? It's not safe anymore to speak my truth. So when the price of poker goes up, when the pressure goes up around big issues like love, connection, business, succession, there's a lot of feelings that are inside one's individual that they don't know how to speak. You know, so one of the challenges that I see in the families that I work with is, for example, a next generation family member saying, you know what, Dad, Mom, I don't like the business. I don't want to do this, but they feel the burden of having to take it on. And then what happens is the family will go through a process with Simon and create all these structuring, and that conversation never occurred. So Simon, I see you're smiling and nodding your head, right? Or the other side of it is, maybe a father or mother doesn't feel safe enough because they don't want to hurt their child and say, you know what, Jimmy, you don't have what it takes. You're not the right person for this role because, looking after this business involves thousands of lives and a lot of money. And you just don't qualify. But that conversation doesn't happen. And the time goes on with Simon and they create the structuring and that conversation hasn't happened. So the point that I want to make is that family unease, when repaired, improves the bottom line and ensures longevity. And family unease is anything that hasn't been discussed. Does that answer your question?
Absolutely. Those are great points that a lot of us don't think about when we're creating plans for our own families. I'd love to take a quick pause and just remind our audience that we will be doing a Q&A at the end of this. So please pop in your questions in the chat room and we'll select a few at the end of the presentation.
And I just want to say one more thing. I want to thank you, Tatiana, for all the work you put into this, and Vanessa and Sir Anthony for organizing this, and Simon Gray for your firm for sponsoring us. It's a real honor and a pleasure to be here with you folks. Thank you so much.
Yes, thank you so much, everybody. I'd love to jump next to Dana Al-Salem. You are a serial tech entrepreneur and investor with 25 years of experience in the global innovation space. Given the rapid global changes in 2020 as a result of the global pandemic, where do you think the best opportunities are, both in terms of geography and industry? Dana, you're on mute.
There you go, unmuting.
Awesome, welcome.
Thank you so much for having me on this panel. I'm so honored to be here, and thank you so much, Vanessa and Sir Anthony and Tatiana, for the hard work you put into it. Yes, I tend to approach the digital space both as having built many tech companies, so I've really been in the trenches all the way up to investing, and now I'm doing a lot more work with governments to really have the macro view. I would like to say that although these are dark times for a lot of countries, I've never been more excited about the innovation space. There is so much that is happening and it's really, really exciting. And I'm seeing a couple of shifts. There are innovative projects that are coming out to actually tackle new issues right now. There are also sectors that have been innovative and around for a while that have not been so prominent because investors' focus weren't so much placed on those areas like e-agro. And then I'm also seeing a lot of public and private sectors coming to get together to create new systems and platforms. So yes, the crisis has shifted focus, placed importance on new sectors that we may have been ignoring before, as well as creating brand new opportunities. So what I tend to do is I look closely at the digital maturity of a country, and I try to see where there have been weaknesses during the crisis. And then the other thing I look at is the changing consumer behavioral patterns. So we can see that in certain countries, there are fundamentals that exist, for example, where I am right now in Paris or New York, but have not existed in other countries in the world like Panama or Ecuador. And so you're starting to actually see consumers' behavioral patterns change. For example, around e-commerce is an area that's really interesting, whereas in other countries, they've been around for 20 years. So you can sort of, with these parameters, predict where certain startups will go. So it's not a hard and fast rule, but I'm seeing certain trends in first world markets who already have solid digital infrastructure. You're seeing more innovation in sustainability or renewable energy or fintech or real estate, more advanced type of digital innovation. Whereas in countries that are lacking the infrastructure, you're seeing this massive acceleration, and they're focusing more on e-commerce, e-learning, e-gov, cybersecurity. And so the takeaways for me are therefore to look closely at what inspired those startups to start in the first place, what the level of digital transformation is in those countries and the predictability of the growth within that country, and then look at the changing consumer behavioral patterns, because some have shifted in 6 months and they're not going back. So you're actually seeing, I'm seeing some trends in countries that are really interesting for an investor. I hope that answers the question.
I'd love it if you gave the audience an example of something that you've seen recently.
Okay. In Panama, I got a lot of phone calls from a lot of startups. So during the crisis, there's a really phenomenal serial entrepreneur in Panama who started the first online grocery store, and he was running about, I don't know, $30,000 to $40,000 per month before the crisis. And within 1 month, he did 10x, so he's now doing $400,000 a month. And even after the lockdown was released and people could go back to supermarkets, he was continuing at $300,000 to $400,000 a month. So actually what you're seeing is consumers' patterns of behaviors in certain countries who never were used to buying groceries online are now set, ready, and they're not going to go back to the old ways of doing things. So he's got a really interesting product. The valuation is super low compared to other online e-commerce sites. That's one example. There are many, many others.
Yeah, absolutely. I think a lot of our behaviors have changed permanently as a result of this pandemic. And even when the world seems to be going back to normal, when we do have a vaccine and all of these things, I do think our behavior has changed in the long term.
Yeah, absolutely. Absolutely. Thank you.
Thank you, Dana. I'd love to jump to Simon Gray next. You are the head of business development at BVI Finance with over 25 years of experience providing financial services to family offices. Why is BVI the regime of choice for so many fund vehicles? And what are the key regulatory elements that makes this regime friendlier than others?
Thank you for allowing me the opportunity. I think there are a number of factors. One of the useful elements is a very flexible and very benign common law legal regime, which is a legacy of the links with the United Kingdom. And that's proving enormously popular in parts of the world where their tradition of law is more codified. Equally, we follow very robust regulatory standards, those of the International Monetary Fund, FATF, IOSCO, etc. And that gives, I think, a degree of comfort, as does our International Arbitration Centre, which is a more cost-effective way of resolving issues, heaven forbid, if relationships deteriorate. But I think one area that we are perhaps best at, it's product innovation and product development. Simon has already spoken very, very eloquently about our trust regime. We're also very big on business companies, and that lends itself very well to startups. We've got nearly 400,000 business companies, and they're showing exponential growth in terms of the digital space. They're very easy to set up, easy to run, and indeed, only 24 hours after Hurricane Irma caused difficulties to the island, we were actually registering companies on the island. We didn't even have to use our business continuity sites around the world. But I think the principal area that I want to focus on is our fund regime. We're the second largest provider of funds in the offshore space. And in terms of family offices and digital, there are three particular areas of our family of six which lend themselves best. One is the Incubator Fund, which we set up in 2013, and initially showed enormous interest from the hedge fund world, where that interest continues. But that's been adopted with great speed by the world of digital opportunities. And the reason is simply cost effective, ease of regulation, and speed, and the fact that there are certain requirements which are suspended, such as the need for an audit, a manager, custodian, etc. So that's one area which is very popular with the family office space. Another is our approved fund regime. And this is something which is enormously popular with the family office audience. And again, for reasons of cost, speed, and simplicity, a maximum of 20 investors at any time. So the concept of a family fits in perfectly there. and a maximum of 100 million in assets. But again, no need for an audit, custodian, etc. And it's not subject to any restricted period of time. But our most recent introduction has been a formalization of our VenCap and private equity space, where we've created a private investment fund regime. This was launched in July and is proving enormously popular with the world of startups, VenCap obviously, but also the private equity space. So I think our capacity to evolve, to change rapidly, and to sustain are probably the most endearing qualities which make us popular with the family office world.
That's great. Thank you so much for that detailed response. Yeah, I think there's a lot of takeaways here for all of our guests. Just a quick reminder for anyone who is not as actively speaking, please keep your mic on mute, just so we don't have as much feedback. I'd love to jump next to our panelist, Sydney Wheatley. You are the Chief Investment Officer for the private office of His Highness Sheikh Mohammed bin Salman bin Abdullah bin Hamad Al Khalifa. There has been a lot of discussion recently about the need for family offices to allocate into alternative investment strategies, such as digital assets. What opportunities are you seeing in the digital asset world that family offices should not miss out on?
So thanks a lot for the question, Tatiana. It's a good one. And thanks to, of course, Sir Anthony and Vanessa and BVI for setting this up. It's always a lot of fun to catch up with all of you. And with Mr. Hadi's background, I feel like I'm traveling, which I haven't done in quite a while. So thanks for that. So look, as a family office, like many other family offices, we typically invest across asset classes, but tend to avoid less developed and, let's say, more volatile markets. That being said, we do have an allocation put to work in the digital asset space. And I would definitely recommend that every family office does the same. So for someone not familiar with the space, it can be a bit intimidating, right? There are a lot of projects, different technologies, terminologies. There is some volatility, but I like to think of this as our 1996 moment. Now, what does that mean? So around 1996, the foundations of the internet were being built. And the investors that took advantage of that were able to ride that wave and are basically to this day benefiting from early investments in Google, Amazon, PayPal, to name but a few. So logically, if this is our 1996 moment for digital assets, this implies that there's going to be an immense amount of value still to be created and captured from applications that we can't really even begin to imagine, right? So the approach that we take is not really to buy, a specific token or a specific digital asset. What we try to do is invest into the infrastructure that is being developed around digital assets, right? But one has to view this similarly the way you would invest into technical startups, meaning you have to throw out your discounted cash flow models, and you have to think about exponential growth models, okay? You have to take a scattershot approach, meaning you have to do many small investments, right? Imagine if in 96 you invested in Alta Vista and you put all your money in there, you'd have nothing today, right? Because Google's the one that took off. So you have to scattershot. You need to have some expertise. If you don't have expertise in-house, don't try this at home, right? Go to a VC fund. There's lots of VC funds that are set up specifically for digital assets, and they have all the required expertise. But sort of to sum up, I'd say family offices have a really long investment horizon. And we like to think of ourselves as very long-term investments. And I can't think of an asset class that will outperform digital assets in the next 10 to 20 years.
Absolutely. I'm curious, as a follow-up, a lot of family offices are still skeptical of investing into digital assets. How did your family office decide to take the leap and start their investing journey into this space?
Not easily. Especially in the Middle East, a lot of the investments that are done are into sort of real estate type investments, right? Mm-hmm. Investing into startups, doing VC, that's a recent thing. It's not something that is historically done here. You buy a building, you get cash flows, everybody's happy. So that was a struggle, honestly. And it took a lot of convincing and sort of a lot of demonstrating of, if you put $1 into Google in 1996, look where you'd be today, and those kinds of conversations.
That's interesting. Thank you so much for your perspective.
Thank you.
Last but not least, we have one more panelist, Fiorenzo. I'm sorry, Manganiello.
Manganiello, it's okay.
Manganiello, I
Yeah.
apologize. It's such a beautiful Italian,
Thank
gorgeous
you.
name. So you are the managing partner of Liane Group and the adjunct professor of blockchain technologies at Geneva Business School, which is very impressive. You've also been focused on digital assets for family offices for some time. What trends are you seeing, and how do you recommend that family offices balance the inherent risk with the sector with the rewards potentially available here?
Yes, actually, I quite agree with what has been said before by Sydney. I've seen in the last 2-3 months a huge interest from family office calling me and asking me how we should invest in digital assets. We have no idea. Should we buy VC funds? And I think that demand was driven by two major factors. One, the simple fact that many large asset managers started to look at digital assets, something like Fidelity. So the large player, institutional players started to enter in the field. And the second thing is that I think anyone realized that during the COVID crisis, the financial market, there was no liquidity in the market, especially in the bond market. So, you know, the bid-ask was extremely high. And while with Bitcoin, you know, we were, for example, able to transact many millions of dollars, you know, without actually having this issue. So there was a huge liquidity on the digital asset market, while the traditional market were freezed. And I like the idea of diversification while thinking about digital assets. So, you know, we can compare to the traditional market. The idea is that imagine that we could do, for example, an allocation of 60% into sort of liquid digital asset, which means basically large crypto, through ETF, through certificates. So there are many instruments that we could use to get an exposure to crypto, which are quite liquid and, you know, very institutional, backed by solid banks. And then, you know, I would consider infrastructure, as Sydney said. Infrastructure, why? Because today the big power of the Bitcoin market would basically to detain the infrastructure. So really, for a family office, I would consider create my own mining farm. So partner with a large mining as a service company and develop my mining farm in obviously in location where we have low electricity price. And that actually is a very profitable business. We can expect 40-50% IRR year per year. And the idea is that still we have the assets behind. So, you know, for family office, which has a more traditional way of investing, they could consider that as a simple infrastructure investment, sort of like a data center, you know, with monthly cash flow that, as Cindy said, we can evaluate using DCFs and other kind of things. The last approach, which obviously is the most risk taker, is to do direct deal. So directly invest into two main sectors, which today are driving the growth. One is decentralized finance. So we've seen a lot of companies into like lending platform, derivative platform. It's still a very early market, probably $700-800 million. But the crypto community is focusing a lot into those kind of initiatives. So family offices need to partner with advisors to understand properly how to evaluate those transactions. And then the second area of interest while considering direct deal might be cryptography solution. So today we are moving from hardware storage solution, the traditional ledger that anyone is using to store digital asset, to cloud-based solutions. And there are few players in the space, extremely exciting companies, which family office should consider to look at. So I would say key takeaways overall, we should consider a very diversified approach composed by more liquid instruments, plus, you know, an infrastructure play probably 20-30%, and, you know, few participation as a direct deal.
Amazing. Do you make any token investments, or do the families you work with make any token investments, or is it usually on the equity side?
Yeah, it's mainly on the equity side. Some family offices, they are interested into real estate tokenization or even collectible assets like arts, etc. But I would say that market, I think it's still premature and difficult to evaluate for families. So the main focus today is really, top capitalization, digital assets, and direct leads, on the equity.
Amazing. Thank you so much for the insight. I'm sure our audience really appreciates it. I'd love to jump to our audience and actually take a few of the Q&A. Vanessa, would you like to help us select a few of the questions?
Yes, so we have actually a first question here for, let's start with Sydney, Sydney Wheatley. So the question is, what asset classes would family offices most likely allocate capital in? What do family offices like about technology investment?
Very broad question, but a very good question. So I can only really speak from a Middle East family office perspective, right? So if you go globally, there's many different kinds of family offices that operate in a different way. I can only really speak from a Middle East perspective. Historically, it's more, as I said, into real estate assets, manufacturing assets, tangible things that you can touch and feel. I would say that these days that is very much changing as second or third generation families sort of come online. And they're venturing out more into the technology space and venturing out more into alternative asset classes. Most of these are done through fund structures, but I have seen large individual investments being made in the technology sector. But there's a long way to go, I would say, in Middle East family offices, having a dedicated team to analyze these opportunities.
Great. Tatiana, can I ask, there's some more questions? Can I continue?
Yeah, I think that was a great response. Let's do another one.
Okay, I have one here for Hadi. What vision do you see for both the UAE and Bahrain?
Hadi, you're on mute. There we go.
There is always a race between Bahrain and Dubai, and Muhammad Al Ali can agree with that, Even though Bahrain started long time ago, but Dubai has taken us over. So the thing is, the difference between the two countries, we walk before we run. And Dubai, sometimes they jump and sometimes they get a very good jump and sometimes they fall. So I think there is a synergy between Dubai and Bahrain, especially between our two governments. They are very close. As you know, Sheikh Mohammed, the ruler of Dubai and the prime ministers of Dubai, his son is married the daughters of, his daughter is married the son of our king. So there is a really very close family relationship between the two countries. So Sheikh Nasser, who is the son of our king, married his daughter. So the things in Dubai, sometimes I feel they're going very fast. So people cannot catch up with. But they have a fantastic systems. I mean, there is nobody in the world have a ministers of artificial intelligence except Dubai. There is nobody in the world has a minister of happiness, So these things are very important, and that's why I think Anthony has moved into Dubai. That's one of the reasons for him to be in Dubai, because there is a lot of opportunity. And digital investment, I think this is the futures, because people can more focus than just seeing face-to-face. They can get all the information and look at it and then analyze it, maybe give it to their financial people, their legal people, and see if there is a room for them to invest. Because the time of really going and meeting people, sitting with people, driving, has gone because of this pandemic. And that's what I think the world will go in that way. But I just want to add something. Again, I go to my friend Francisco regarding SAFE. I am a third generation and my children are fourth generation. So I made them feel very safe because each one has got the roles of a business he would love to run himself and grow it within Al Hayati Group. So, and the other things, this SAFE safety and safeness is linked with the value. They feel there is a value for everything they do. And beside that, we learn from our father that you have to have a philanthropy, you have to have a charity to help people. It's not only about making money. So all my brother and sister, the 13 of us, whatever they make from their net profits, they take 20% of it and throw it into a kitty for philanthropy and for people who are in need. We don't give cash. If somebody need a medical treatment, we find the best hospital to treat him. If somebody need a housing, we find a house for him, because we believe in cash could be misused. So that's another thing about value in life, is to do things to help others who are in need. Thank you.
Wow, that's amazing. Go ahead.
But Tatiana, if I may, I just want to, expand on what Hadi was talking about. A lot of families are caught up in this concept of entitlement, and they feel that they're entitled to the business, entitled to the assets. And successful families like Hadi's have realized that it's not about entitlement, it's about stewardship. It's about stewardship, because when we have stewardship, we can have impact. And at Veritas, we talked about stewardship when it includes contribution, improves the bottom line, ensures legacy, because work with meaning results in better work.
Franco, that's a very good point. And we just like to go back. Remember that workshop that you organized so nicely for us at the last Dubai conference in November? One of the questions that we have here is about human capital. At what age should children start learning about the human capital in their family office?
We work with a family where their views on that is they start at age 5 or 6, because what happens is, you have these little people running around these houses, and they're exposed to all the wealth, right? So we can't hide that from them. So why not educate them about it? Make them say, yes, we have these things, and there's a responsibility with all of these things that we have, all of these beautiful things, and approach it from a perspective of, we need to be a servant. We need to serve these things. We need to serve those that assist us in maintaining these things. It's not about, I have a servant who maintains this for me. No, 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 no. I need to serve them and these things so that together we can leave it in better hands, right? You see, and the challenge that a lot of families have is, and I've noticed this with my global practice, is they think that the traditional governance, right, will deal with all of these things, because you've got processes and procedures that focus on the ownership and the business decision-making. And as I said earlier, what gets in the way is the human beings. As my coach says, relationships would be wonderful if it wasn't for the humans involved. So we believe that organized emotional governance relieves friction in family business and ensures legacy. We have to learn to feel safe, and teaching that 5 and 6-year-old that it's okay to be part of this wealth is making them feel safe, because when they're going to school, they're getting bullied and made fun of for being wealthy.
Thank you. Thank you.
That's interesting. There's definitely a lot of layers at play. I'd like to just comment that I now understand why Anthony is always smiling, because Dubai has a minister of happiness. So now everything makes sense. I'm excited to visit Dubai. Vanessa, do we have any more questions from the audience?
Yes, we actually do. We actually have one question for everyone. So one for our wonderful and beautiful Dana. The question is, and knowing that Dana also does this in her free time, the question is, any advice that you would give to young entrepreneurs? And I remember, Dana, you go away on your special holiday with the young people that you train, right?
Yeah, actually, I did want to say something that was a sort of a crossroads between what Hadi just said and what Francesco just said. During the crisis, I got a few phone calls from presidents of countries saying, we're in trouble and we don't know what to do, and how can you help? And I decided to launch a lot of sort of national ideathons for startups and innovators. And I spent a lot of time doing this, and they turned out to be so successful. We're on our 4th edition now. I'm exhausted, to be honest. But what's incredible is that all of these young innovators, whether global or within that specific country, have been sort of regenerated. There's a new dialogue that has been created between the government and the citizens, and we find some sponsorship money. So, you know, we have them go through a very serious, you know, tech panel of jury members. I also sit on the World Summit Awards and MIT grand jury, so I'm used to evaluating tech projects. So it was really, really amazing. The feedback of the citizens were amazing. The politicians were delighted because suddenly people were speaking about positive things in the middle of a crisis, as opposed to attacking supermarkets or having civil unrest. So there is something in spending your time actually doing charitable or pro bono work that can actually have an impact using startups, using innovators, that actually has like a national good in terms of positive sentiments. And yes, I did in Monaco speak with Hadi by my side about succession. And one of the things that I had said is, I unfortunately never got married or had children. Along the way, I somehow picked up 4 kids that are between 26 and 30. And I mentor them every Friday, every week. And they've been with me now for 4 years. What I've learned in this journey that I wanted to share when we were in Monaco speaking about succession is succession doesn't only have to be genetic. It actually can be for humanity, it can be for a country, it could be for some kids you pick up along the way. So I think succession is actually the act of wanting to share the experience that you had in life, the mistakes you made, as well as the success you have, so that others can stand on your shoulders and they don't have to necessarily be your family members.
Wow, that's really amazing. And it's a great perspective, I think, for a lot of us as we're building businesses around the world in different ways that we can share them with the next generation. Vanessa, do we have another one?
Yes, we have 3 more and then 2 open questions if we have time. So there's one here for Fiorenzo. What is the exposure and risk appetite of family offices with regards to digital asset class? What are the key challenges that they face in this space?
Yes, so obviously, as I was saying before, traditional family office, they are not used to digital assets. So, you know, there is a little bit of education needed. So usually the way I work is that, you know, we simply organize training sections where, you know, we can go from the basic of blockchain, you know, through all the new trends in digital assets. So there is a first things that needs to be very important is education. So family office needs to really understand how does that work. And then, you know, many family office always asking the same question: what about if Bitcoin does not exist anymore? What about if regulation change in that country? And the end of the story, you know, this is still a very volatile asset class. And that's why it's very important to diversify and not focus on a single investment or a single line, but having a broader approach. As saying before, definitely an infrastructure play is very important, because at the end of the story, you are owning a data center. Potentially, you can turn that data center for AI, clouds. You know, you are not stuck to the investment.
Great.
Absolutely.
We have 2 more questions here for Simon Gray and Simon Filmer. I think we're going to start with we'll start with Simon Filmer. Let's see if how you feel about this question. So the question is: COVID-19 is a life-threatening, unprecedented situation. Is there any specific or special focus being given to investments into innovation in COVID-19? Therapeutics, medical wearables, like for example, the masks that we are so happy to wear every day.
I'm probably not the best person to answer the specific question around the investments on the pharmaceutical side, on those pieces. What I would reference, and someone, one of the other panelists can feel free to pick up that part on the investment piece. What I would say though, and going back to kind of Hadi's original comments and to my comments, is that it's always important to have succession planning in place. And what we see with families, with investors, with entrepreneurs, who by definition are exceptionally busy, exceptionally driven and motivated and looking towards the future, and not necessarily thinking about succession. And I think the pandemic should make us stop and pause and think perhaps about, those bad things that might go wrong and that we might need to kind of plan for the future. So perhaps I'm answering one piece of it. I'm afraid, answering the pharmaceutical investment piece. I don't think I'm the right person to do that. But hopefully I've added something around making sure that we are thinking about succession, and a good time to do that is now.
And that's a very good answer, Simon. Do you think have you seen in the last months that these families that you take care of, that they're, being a bit more mindful about the future and their safeguard and the well-being of their family?
Absolutely, no question. So a lot of the initial communication to professional trustees was around investments. Oh my goodness, what do we do? How do we move this? What happens here? And then probably the next phase of that was, I'm rethinking this. Is the succession and the structure that I have in place now, is this fit for purpose? Is this fit for purpose for changing circumstances, changing dynamics with the family as well? So absolutely, within the sort of teams that are dealing with succession planning, it's definitely been a very busy time. And you can imagine, back to Francesco's points about safety, obviously during a global pandemic, this is going to be coming to the forefront of people's minds.
Thank you. And then we have one last, we do have one open question, but I just thought we'd hear from Simon Gray a little bit. Simon, this is another half an open question, and it's someone asks, if you had the choice to invest $1 billion to solve one problem, what would that problem be?
Well, I shall begin with a flippant comment on the fact that I'm paying for university for 4 children. But having got that off my chest, I think one of the beauties of being involved in family offices, it's the element of philanthropy and the ability to try and make the world better and do good. I would love to create my own foundation and assist in good causes, but I suspect what I would do is invest sums in established foundations, such as the Gates Foundation, which has a very strong link with the pharmaceutical industry anyway. And I once had the privilege of meeting a senior member of the Getty family, and I loved the way that he described the real happiness he had in giving away money. Not absolutely everything, he lived extremely well, but he said, this is absolute happiness, this is perfection, I'm doing good. And I thought that was a nice thing to do. So I suspect I would try and emulate that. I suspect it's rather academic, alas, but never mind.
Oh, thank you. Happy money. And then we have an open question here. So Tatiana, this is the last one, and whoever would like to respond to this question. So the question is, it's a bit what we've just discussed, but it goes along the lines of how important is investment for wealth protection rather than investment for growth? If an impact investment could legitimately offset millions in tax, which in many countries will increase in order to repay QE and MMT, government money printing, would that be as interesting as investment which is designed solely to drive profit?
Wow, that's a very diverse question. If I can just jump in to lay some groundwork before maybe Hadi will give us his take. I see his hand up. In my experience working with family offices, there is at the beginning of the growth of the family office, you're obviously interested much more in growth and high risk opportunities, versus once you get into the third and fourth generation, it's much more about wealth protection and preservation rather than as much growth. But Hadi, as a third generation investor who's now raising the fourth generation, has that been your experience?
Well, I think the word investment is a very unique word, because everybody link investment with how much I will get back and how much I will grow. But the most important thing today is if you know really how to make a calculated risk in your investment and spread your money in different baskets. And with today, the digital world, there is a lot of chance for people to spread their investment in different baskets. And I believe that the world in about 2, 3, 4 months, because they said maybe the pandemic will have another waves. So we'll have to learn from the first one and prepare if there is a second one coming. But investment is always linked with how much will I get back and how much is that growth will be.
Absolutely. And then on the second part of that question, there was an element about impact. And I think in the past, a lot of impact investments have been linked with charity and tax write-offs. And there's a major shift that's currently happening. And if somebody wants to chime in on that, but in my experience, what I'm seeing across investment opportunities, it's actually becoming more profitable to invest with impact in mind, particularly as we're seeing a lot of green energy opportunities around the world that are now becoming more and more profitable. Do any of our panelists have something to add on impact?
Yeah, Tatiana, I just, go ahead, Sydney.
Go ahead, Francesco. You go first.
Thank you. I just want to look at it from a different perspective. You know, when we think about investing for impact, we typically think of financial assets. The families that are very successful look at impact by investing in human capital. They invest in their next generation, they invest in themselves, because the more they know themselves, the safer they're going to feel, and that will positively impact the financial assets.
Thank you. Sydney, do you have something to add?
Sorry, yeah, I just wanted to add, so I think you're right. Historically, it was sort of like a choice. Do I invest for profit or do I invest to have an impact? I think there has been a fundamental paradigm shift in that of the last 10 years. And I think that you're seeing in a lot of family offices, especially when you go to the next generation, it's not even a choice anymore, right? We're all educated enough to understand that, you know, if we all do the right thing, good things will happen. And it's not necessarily that generation is looking for, you know, super returns or high margins, right? They're already pretty well off. And they want to use that success to actually improve the world.
Absolutely. Thank you so much. Vanessa, what was the third part of that question about monetary MMT and quantitative easing? I'd love to address that properly.
Bear with me a second.
It was a layered question.
Yeah, I know. I don't think I have the document anymore. I'm so sorry, Tatiana.
No problem. I would love it if one of our panelists just chimed in and maybe gave an opinion on what they feel the impact of unprecedented quantitative easing and monetary policy is going to have on the rest of the world. Any MMT experts in the house?
Not an expert at all, by any stretch of the imagination. But when we do think about, let's say, our dollar investments, it is a concern, right? So it can go either way. Either the dollar falls apart, right? And then, you know, you're very happy with your Bitcoin investments, you know, if you've invested in a few thousand Bitcoin. But what we're seeing is actually the dollar strengthening, right? Which is really odd. Which means that actually all the other currencies are being devalued relative to the dollar. So the dollar has proven to be really, really strong. I am worried about zero interest rates for the next decade, which Chairman Powell has pretty much confirmed, which means that asset prices will definitely be inflated over the next 10 years. So it's definitely something to think about, and something we think about every single day. But as I said, I'm not a trained economist, so it's very difficult to say what the actual implications will be. I think it's very much up in the air.
Absolutely. And I feel like we could do a whole separate panel on this, just on this subject alone. You know, we will have zero interest rates for at least 3 to 4 years. I'm not sure about 10, but we'll see. And I think one unexpected side effect of the pandemic is that the vast majority of global trade and global debt is now being conducted in US dollars. And so we're seeing an unprecedented shortage of USD and actual deflationary effects, despite trillions of dollars being put into the economy. But as I said, that's a whole other separate conversation. Maybe Anthony, we can schedule something to really discuss the effects of monetary policy with our audience at another time.
Can I just add one small thing? What is kind of concerning is that the stock market right now, which is, you know, at record levels, etc. What's really interesting is that they react so harshly to, you know, a 0.25% increase in interest rates, and that's very worrying. You know, if you're all in equities, or if you have a substantial holding in equities, because the interest rates have nowhere else to go, right? They'll never do negative yielding interest rates. So it's concerning, because if they do decide to raise by even 0.25%, the stock market is so sensitive to that change that you could see your actual asset values go down by 10, 15, 20%. Just based on that decision alone.
Wow. Yeah, what's happening with interest rates right now is it's very curious, and it's really destroyed the bond market and fixed income instruments for a lot of people. And the running joke in the US right now is Powell killed the 60-40 rule. Previously, you've been told prudently invest 60% in equities and 40% in bonds. And now we're getting close to negative interest rates, and a lot of fixed income instruments are being worn away. And so we really have to rethink our investment strategies. And I know that fixed income is actually a sector that's growing within the digital asset space. There are a lot of companies that are now offering 6, 8, 10% APY on your digital asset investments. So whereas in the traditional markets, we're seeing fixed income getting completely eroded, we're seeing a boom in those assets in the digital asset space. Vanessa, do we have any other ones, or should we wrap up? We're a little over 10 a.m.
Yes, let's wrap up, Tatiana. And Tatiana, I just wanted to thank you so much. It's been an honor to have you moderate this panel, and I think everyone can agree that it's just been such a fun journey. Thank you to all panelists. A huge thank you to BVI Finance for sponsoring this panel. And also I just wanted to thank, obviously, our fantastic chairman, Sir Anthony Ritossa, for all that he does, for creating these amazing conferences, with our next one coming up end of October 26th, 28th at the World of Astoria in Dubai. So anyone who hasn't signed up, you still have some time. And then thank you, Mohammed Al-Ali, for allowing us the patronage of His Highness Sheikh Ahmed Al Maktoum. So everyone, thank you so much. Did anyone want to say anything, or always this a good wrap for everyone?
I just
Vanessa, thank you so much. Go ahead, Hadi.
Thank you very much for Simon Gray with his sponsorship, PBI Finance, and also to Sir Anthony. Whenever I look at him, he is always smiling. I never seen him frown in my life since I met him. So that gave a lot of energy, a positive energy to everybody. And of course, Tatiana, you have done a very good job as usual. And Vanessa, the icing on the cake. But please, I believe so much in networking. I'm still repeating that, let's create a group of ourselves, because that's the way we can exchange idea, we can find some way to do business together. So please send your number to Vanessa, she's a very good organizer, and let's have a group of ourselves. Thank you very much.
Thank you, everyone.
Thank you so much, everybody. It was a pleasure, and I look forward to seeing everybody in Dubai. And thank you so much, Anthony.
Thank you.
You too. Thank you very much.
Thanks, everyone. Have a good day. Take care.
Bye-bye.
Thank you.
Bye.
Bye.